Great, thank you. Obviously a select audience for a select opportunity. So we are an exploration and development company active in Namibia. I'm the founder of that company in 2016 as a private company. I started it literally as an idea. We've got a couple of very unique angles which I'll tell you about. The most important of which is that we actually made a very significant, you can call it major grassroots discovery, which is currently around 2 million ounces. It's growing quite substantially, and the project is being fast-tracked to production, and it's what you're looking at on the slide. But before I go into the presentation itself, I should give you a bit of background story that actually led to Osino being formed and what I've done. So I'm a Namibian citizen. I'm an African, believe it or not. Grew up in Namibia and was a mining engineer, built and operated gold mines in West Africa. So I've been on all sides of the table. And eventually in 2010, I acquired a project in Namibia, which we took into a Canadian public company. And we ended up selling it to B2Gold for $200 million in 2012. So it wasn't a crazy deal. It was a good deal. Everybody made money. Most importantly, though, B2Gold built a super successful gold mine, highly profitable, one of the lowest cost producers in the world. And what we have here as Osino is basically a carbon copy of that project. It's got the same scale, it's the same geology, it's on the same belt, same mineralogy, slightly lower grade, but I think it's going to be bigger in terms of resource. And so what we're doing here is basically just executing, getting this project to the same stage and building value, either by selling that project once we've delivered it, or if we have to, we'll build it. We're not scared of doing that. I don't think it's the best way to create value in the development space as a single asset explorer or developer, but that's all driven by value. All right, so we've got this Twin Hills project. As I said, 2 million ounces so far. We've drilled 120,000 meters this year. We drilled 60,000 meters last year, so we are extremely busy. We've got about 120 people in Namibia, 20 geologists on the project. We really are cooking. The whole idea is to fast track this project so that we can get through that Lassonde curve trough that you all have heard about, which some people refer to. So we get into that last up leg, and I think we are now in that last leg up. We are very much about de-risking. We've got a low technical risk, low geological risk, low metallurgical risk. All the studies and so forth have been done. Also, being in Namibia, we're in a weak exchange rate environment, so our capital cost and cost of operating is very low. For example, drilling costs are less than half of what they are in West Africa, for example, or probably a third of what they are in Canada. And that's reflected in our very low capital cost. So this is as I said, a simple project, but it's very manageable in terms of scale, around about $200 million of capital. And it's got plenty of upside left. So, I mean, for the early investors, we started this company as a private co in 2016. We've delivered about a 7-8 bagger so far for our investors. But going forward, there's substantial value left. And the crux of the matter is that value for you guys as potential investors comes at a significantly reduced risk. All these factors that I mentioned before, it's like the geology. We don't have to find anything, it's there. We just have to make it better and bigger. It's much easier than finding something in the first place. So yeah, and at the same time, we have a very attractive valuation because the market still thinks we're an exploration company. No one's been paying attention because of crypto and all these factors, and so I think it's a perfect opportunity to get in. And I think as we de-risk and as we deliver these milestones, which I'll talk about in the next few months, we should re-rate substantially. One of the key features is Ross Beatty is a Canadian, highly respected billionaire investor. I got to know him. I've done another deal a few years ago where I sold him a company, and he took to like me and respect me, so he's the biggest shareholder. And we've got a who's who of other investors. We really have a blue chip group of shareholders. About a third is institutions. Got all the big names are in there. We've got 2 billionaires on the shareholder register, including the one that made Robert Friedland, that's Paul Stevens out of California, and a bunch of others. We also have a lot of German shareholders. I'm of German descent, so a lot of people in Germany follow me, and Switzerland and so forth. We also have a great analyst following, so it's very important to have the equity capital markets behind you, and we've been quite good there. So got 7 analysts and a good share structure. Quite a good share price performance relative to the indices. Of course, we've traded down like everybody else, but we've traded defensively relative to the GDX, or GDXJ, which is one of the major indices, or even relative to B2 Gold, which is our proxy in Namibia, because we sold them the last project, and maybe we'll sell them this one too. We'll see. So being in Namibia is, of course, my background, but it's my backyard, rather. It's a low-risk jurisdiction. I consider it of the same risk as Canada. It's very stable, fiscally stable, it's secure, no issues, it's got a very well-established mining industry, access to skills, etc. So it's a great place to operate. It's got plenty of operating gold mines. Geologically, it's less well known. It's more known, obviously, for uranium. A lot of you would have invested in some uranium companies out of Namibia. We are in the Pan-African belt. That's what you're looking at here. It's the same mineral belt that goes into Zambia. Same rocks, sedimentary rocks, and it is an orogenic belt. So it means generally these orogenic gold deposits tend to be large, but they tend to be more disseminated. So in our case, it's a sedimentary hosted, structurally controlled deposit. So these things tend to become big. The other two projects in Namibia, the other two gold projects, are both multi-million ounce projects. Ours, no doubt, will also become a multi-million ounce project. We started off as a consolidation play. We just, in 2016, obviously we didn't have anything. We had just sold the company to B2 Gold. So we just put a big license package together. We then assembled some good shareholders, did a really high-quality exploration program, systematic program, and it ended up resulting in this discovery. It took us about 3 or 4 years. We spent $25 million getting there, which, if you consider for 2 million ounces, $14 per ounce cost of discovery is industry leading. I mean, you saw Cisco earlier, their cost has been $35 an ounce, and they're very proud of that, rightly so. Our cost was $14 an ounce. So we've been extremely efficient, and yeah, we'll continue to be that way. We are now a development company. Of course, we focused on the Twin Hills project, which is what I'm talking about, but we do have a lot of that exploration leverage left. We are active across the licenses. We already seeing some very interesting sniffs in other areas, and so I think there's a big chance of making additional discoveries. We're contemplating potentially to do a exploration company spin-out. Maybe just to tease you a bit, we've actually got one of the major global gold companies visiting us in about a month's time to consider maybe doing that spin-out with us. They're not interested in Twin Hills. Twin Hills is too small for them. That's more a mid-tier opportunity. But they are. It tells you something about Namibia as an emerging gold jurisdiction in Africa. We're at the forefront of that. So this is the district. We truly can claim to control an entire district. We put this together in 2015 when nobody cared. We control a 100-kilometer structure, a fertile structure which has one major mine on it and now another deposit. We have a 15-kilometer gold system, surface system, which has so far been, about half of it has been drilled. That's where our 2 million ounces are. You can see that at the center there, the two red dots. Those are the two discoveries we've made so far. I think there's a third one coming. We've got quite a lot of smoke. Hopefully we can add some fire and then announce that. And but of course, the focus has been on developing that project at the core. So we put out a PEA in August. It was a starter PEA. Very good numbers, $200 million capex, just under 400 million US after tax, after everything, NPV, at realistic numbers. But that's just a starter project. Since then, we've drilled 60, 70,000 meters, and so the next PEA, which is going to be an upgrade, might be a pre-feasibility. We're grappling with that. Will have a substantial upgrade. It's going to be 50% or so bigger NPV. And it will also hopefully get us to the 150,000 ounces a year production level, which is kind of the credibility threshold in order to get onto the radar screen of the mid-tier producers who we ultimately want to attract them as potential acquirers. So we're going to get there. That's all basically done. There's no exploration risk or financing risk or any of that risk to deliver that. This is we just got to go through the motions, cross the T's and dot the I's. That's our speciality. All right, so in terms of studies, or just generally in terms of our approach, I'm very proud to say that we truly maintain best practice. So we've had a bunch of producers that have visited us. Generally, everybody's very happy. Everybody says we're doing a great job in terms of exploration, but also in terms of studies. We work with the best specialists we can find. Like on the development side of things, we work with Lycopodium. It's an Australian, it's one of the foremost global gold mine builders and study groups. So they did the PEA, they're going to do the pre-feasibility study, and all the other ones there, all the specialist studies are either completed or well advanced. That is, hydrology, environmental, geotech, it's all done. And the work that we're doing is being done, even though we're just at the PEA stage, we're doing it to definitive study level of detail, because the idea is to advance from the PEA, the next PEA, which comes out Q1 next year, end of Q1. The plan is very quickly thereafter to advance this to the definitive stage. So I think around about middle of next year, we plan to put out a definitive study. We need that definitive study because we want to raise debt. Because of course, one of the weaknesses for companies like ours is the gap between making the discovery, having advanced it, and actually building it. Everyone knows that there will be a big equity raise and a lot of money will have to be raised, and that often is an overhang on the stock, and that's why we're very focused on eliminating that risk by actually procuring such a project finance package. So to sum that all up, the plan is that by middle of next year, I think we will have the whole thing wrapped up, ready to go, either to sell to somebody or to develop ourselves. And that whole question is really driven by share price. It's a question of valuation. It's a question of how best do you extract value from a development project. We can have a discussion about that afterwards. Yeah, so the project has been drilled to death, really. The results are very, very consistent, which is beautiful. So it doesn't always excite the Canadian retail market because it's generally lower grade, but a very thick package, very continuous laterally. Project is still open at depth. We've drilled it. I think I said it's an open pit project, so it goes from surface down to about 350 meters at the moment. We haven't drilled it. The deepest we've drilled it is 400 meters, but we've got actually 8 rigs on the property at the moment, and we're drilling deeper. So it's a given that resource is going to grow substantially. That's the PEA pit. It's basically a syncline. It's very simple geology. You've got to imagine like an elongated bowl. One side of the bowl is mineralized. It's about a 50 to 100 meter thick package running at between 1 and 1.5 grams per ton. There are high grade shoots within that which give you the juice when you eventually actually mine this. Metallurgy is always a key question. So sorry to be boring. Again, it's easy. It's very simple. It's a straightforward leach. No fatal flaws, no issues at all. It's going to be crush, grind, mill, gravity recovery, and leach. So straightforward. We've done 4 phases of test work. We're already in BFS level of test work, so we're doing trade-off analyses, variability testing, etc. That's all stuff that very few junior companies do at the PEA stage, but it's all designed to enable us to fast track into the BFS. Site layout is straightforward. In Namibia, of course, access to utilities is easy. It's located in an infrastructure-dense area. And like I said, there's a lot of growth left. Exploration growth, optimization growth, recovery, all these numbers are going to get better as we move this forward. So I see I'm running out of time. So in terms of valuation, of course, that's the best thing for you to know as an investor. Once you've satisfied that it's a good project, and if you can get it for a good valuation, then that's the time to buy the stock. And that's certainly the case with us. We're trading at about 0.3 times NAV, which is the correct multiple, I believe, to use the correct valuation methodology to use for a company at our stage. I think we should be trading at 0.5, 0.6, and I think we'll get there over the next 6 months. We take ESG and responsibility and so forth very serious. We've got a big program. In summary, I think we are one of the best risk-adjusted return opportunities out there. I think it's much better to buy a 50% chance of a 3, 4, 5 bagger than a 5% chance of a 20 bagger. And I think that sums up the opportunity.
Thank you, Heye.
Thank you.